Good morning friends and welcome to the pre-market view. Friends, we have seen a lot of weakness across the global markets starting from US, which was down from 0.5 to about 1%. Also European markets were also down anywhere from about 0.5% to almost 1.75%. And when we look at the Asian markets today, they are also down about 1 to almost 2%. The main concerns are that there is some amount of slowdown across the globe, which is reflected in the way the manufacturing data is coming out. And though a lot of liquidity infusion has happened in the Eurozone, still the core problem or the crisis continues to remain, and there is no resolution to that, particularly the Spain and Greece part. So which is unnerving for a lot of investors. And also friends, Alcoa reported numbers in US as the earnings season has kick-started in US markets as well. And though the numbers were slightly better than the street expectations, the overall outlook for the aluminium production has been lowered, which is a bit of a negative for the sentiment. And in terms of flows friends, yesterday FIIs were net buyers to the tune of about 413 crore, whereas the domestic institutions were sellers to the tune of about 615 odd crore. On that note, let me invite Shaivar to take us through important F&O cues and the strategies that we can have in the current market scenario.
Welcome friends, we've seen that in the Monday's trade market some short covering has taken place in the Nifty, and in yesterday's trade also what we have seen is that some long square off has taken place in the markets. What we have also seen is that the PCR ratio is still able to maintain above the mark of 1, which is a good sign for the market. Now focusing on the strikes friend, what we have seen is that 5,600 put option followed by 5,500 put option has seen a good activity in open interest in yesterday's trade. Whereas on the call side, 5,800 of call option stands with the highest number of shares in the open interest. So probably 5,800 would act as a hurdle for the market in the coming days. Now on the lower side, 5,600, if 5,600 would act as an important support or an important level if 5,700 is broken. As we are trading below our weekly VWAP of 5780, our bias for the market is still negative, and in this scenario what we would advise is that any rise in the market can be taken as an opportunity to go short. And on intraday basis, if one wants to go short, probably 5,750, 5,760 can be maintained as a stop loss for the short side. We have identified 3 stocks on intraday basis. Coal India is looking negative with resistance of 364 rupees 25 paisa. One can also go short on Bank of Baroda with resistance of 786 rupees 90 paisa, and IRB Infrastructure with resistance of 155 rupees 80 paisa. Whereas on positional basis, we have recommended dual put option of strike 230, where one can maintain a stop loss of 1 rupees on closing basis and target of 5 on 5 and 7. This call would be probably for 8 to 9 days. Thank you.
Friends, back home our markets were up about 0.5% yesterday, but overall sentiment continues to be weak given the global cues, and also the fact that we have some negative developments on the political front since some of the parties like BSP have said that they may not go ahead and support the government on the FDI and retail front. So that has added to some kind of a nervousness in the market. And talking about the news which have hit the markets today, first of all friends, Shom panel has come out with their suggestions on the taxation related matters, and one of the key recommendations is that all the budget provisions relating to indirect transfer should be applied prospectively as against the retrospective effect that the government was contemplating. This has come in as a big relief for the market because a lot of FIs were under stress because of that development, and if these recommendations are implemented, then that part would be taken care of. Also friends, retrospective application of tax should only happen in rare cases, which is definitely a big positive, and in case there is a retrospective effect of any of the tax laws, then it should apply to only those who have actually earned the capital gains tax, and there should not be any interest or penalty levied on those trades. So this definitely has come in as a big relief for Vodafone and also for the overall market sentiment, and this could be a big positive trigger for our markets. Also friends, the finance ministry has urged to Reserve Bank of India that they need not wait for the change in the Banking Regulation Act for issuing the new banking licenses. And for some of the banks where the possibility of M&A is very high, like Karnataka Bank and some of the south-based banks, this could be a big positive trigger for them. So one could consider going long on those banking stocks because of this development. And Ranbaxy has got an approval for one of the drugs in the US markets, so one can go long on Ranbaxy with a stop loss of 527 and a target of about 554 to 565. ITC has done price hike across the category of products anywhere from about 10% to 20%. So one can go long on ITC with a stop loss of 274.5 and a target of about 288 to 294. And JP Associates talks with one of the Irish cement maker CRH has been terminated, and because of that one can really short JP Associates with a stop loss of 86.5 and target of 82 to 81. Some negative news for Reliance, as there is a statement from the oil secretary that their gas blocks in KG-D6 basin may last only up to 2015-16. So this is definitely a bit of a negative for Reliance Industries, and we've seen some pressure on the stock in the past couple of days. So one can short Reliance with a stop loss of 831 and a target of 791 to 774. And in case of Oil India and ONGC, the government has said that they may have to give a discount of about $56 per barrel to the oil marketing companies, which is negative for ONGC, and one can go short there with a stop loss of 286 and a target of about 272.5 to 267. And friends, earnings season kickstarts from today, and the first to report the numbers will be IndusInd Bank, and we are expecting about 25% growth in the net interest income as well as in the net profit. And based on the consensus earning expectations and the technical charts, we suggest that one can go long in the range of 369 to 365 with a stop loss of 361 and for a target of about 378 to 390. This is the earnings strategy report that we shall be coming out with as and when the companies announce numbers, and this would also be covered in the other section called earnings strategy report. That's it from all of us, friends. See you tomorrow at the same time.